Good morning.
Good morning. Okay.
Good morning, everyone. Thank you for joining the USVI SSBCI program, Get Bank Ready. And I want to thank our partners in reference to conducting the workshop. I'd like to take the opportunity to introduce my team. I'm Wayne Biggs Jr. I'm the Chief Executive Officer of the Virgin Islands Economic Development Authority. Here with me is Dwayne Benjamin. Dwayne is the Assistant Chief Executive Officer. Also, Ms. Charmaine Brooks. Charmaine is the Director of the SSBCI program. Miss Selena Morris. Selena is our Director of Marketing. Also with us, we have, and I'm trying to just run down the list to see, I can't see everybody, Mr. Kirk Callwood. Kirk is the Associate Managing Director for Economic Development. Miss Lynette Lindesay. Lynette is the Executive Assistant to the CEO. I know I saw Miss Kenisha Gomes. Kenisha is our loan officer with the Economic Development Bank. And I think I saw Miss Joanna Williams, who was a loan assistant with the Economic Development Bank also. And I think that's it for staff at the moment. Again, I want to welcome you and hopefully you'll enjoy this webinar. And this will be the first in a series of webinars that the EDA will put on along with our partners in reference to SSBCI. I'd like to turn it over to Charmaine Brooks. As I indicated, she is the director of the SSBCI program, and she is the direct contact for anybody that has questions in regard to SSBCI. Charmaine?
Thank you. Thank you. Good morning again to everyone. Thank you, CEO Biggs. And thank you to everyone for taking the time out of your busy schedules to join us today. We truly appreciate your presence and your interest. We would also like to take a moment to acknowledge and thank the lenders, our sister government agencies, and members of the Small Business Development Center, the Service Corps of Retired Executives, the Small Business Administration, who are present with us today. Your continued support and partnership are invaluable, and we are grateful, truly grateful for your participation. Now, the purpose of today's webinar is to introduce our State Small Business Credit Initiative Technical Assistance Program, which has been designed to provide guidance, support, and technical resources to help achieve small business financing goals. This program will offer structured assistance, practical tools, and expert insight to ensure effective implementation and meaningful outcomes. We are also pleased to introduce the consulting firm, SBC Consulting LLC, that has been contracted to lead this effort. Their team brings the experience, the technical expertise, and a strong commitment to supporting this program. So throughout this initiative, they will work closely with stakeholders to provide direction, answer questions, and help navigate each phase of the process. So today's session will give you an overview of the SSBCI Technical Assistance Program and an opportunity to become familiar with the team who will be working alongside you. So now at this time, I will hand things over to our consulting team, specifically Christy Dudgeon, who will further introduce herself and the members of her team and walk you through the presentation, providing more detailed information. Again, thank you all for joining us today, and we look forward to a very productive session. Christy?
Thank you, Charmaine. As Charmaine mentioned, my name is Christy Dudgeon. I am with SBC Consulting. I am the president. With me today is Karen Wilson. She is our vice president and all things operations. And we also have one of our consultants, Denise Guerin, with us as well. We are, as Charmaine mentioned, a small technical assistance firm who will be assisting all the small business owners who need assistance throughout this program for the next 3 years as this program runs. Feel free to follow myself as well as our company on LinkedIn or Facebook. I know many of you today are here because you saw some of the ads that we had running on Facebook to find this workshop. What you can expect today in this training, or what we are going to discuss. As Charmaine mentioned, we're going to talk about the SSBCI program, exactly what that is, especially from a technical assistance standpoint, how the technical assistance program works, the types of support that is available to small businesses throughout USVI, what lenders are looking for and why, and the steps you can take now to get organized and prepare your business. So what is SSBCI? As Charmaine mentioned, it's the State Small Business Credit Initiative. This is a federally funded program. It's designed to increase access to capital for small businesses, support business expansion and job creation, and to strengthen local economies. SSBCI has two different parts to it. It's the loan program or the capital program, which provides direct financing such as loans or equity investments to help small businesses grow. It also has the SSBCI Technical Assistance Program, which provides free accounting, financial, and legal guidance to qualify businesses that are applying for or preparing to apply for or have previously applied for an SSBCI capital program or other federal or other jurisdictional small business program. I want to take a moment to mention there is a chat feature in this webinar. If you are on a computer, you can navigate to the bottom of Zoom and you'll probably see different icons that say, one of them will say chat. If you have any questions as I'm speaking, because there's going to be quite a bit of material that I'm going to cover, please go ahead and put that question in the chat and Karen will be monitoring it and she will be answering your questions as I go along. There will also be space at the very end where I will answer any follow-up questions that we haven't been able to get to throughout the webinar. There are additional people that are coming in throughout the program, it looks like. So how this program works, as Charmaine mentioned, there are some key players that are part of the SSBCI program. So the EDA team is administering the SSBCI loans and the technical assistance programs locally. Merchants Bank, First Bank, and Banco Popular to date have completed SSBCI loan transactions through the SSBCI program. And thank you to those representatives that are here in this workshop today. And then SBC Consulting and our team is providing that technical assistance through 4 yearly workshops. So today is the first of 4 that we will be hosting, as well as one-on-one virtual meetings directly with small business owners. So you will have the opportunity to meet with someone on our team, such as Denise, and she will work through some of these questions or problems that you may be having, either for those bank loan applications or the other components of the SSBCI program, which we're going to talk about now. These are other members of the SBC team that you may see these faces throughout this program, or you will be connected to them. Everyone on our team has a different specialty, whether it be accounting or finance or legal components. So what this technical assistance program with SSBCI can help you with. First and foremost is accounting and financial record support. So this can be anything from preparing financial statements, organizing those business records, digitalizing financial records, improving bookkeeping practices or learning bookkeeping practices, as well as implementing accounting software such as QuickBooks. Lenders often rely very heavily on accurate financial information to evaluate your risk. So that is one of the biggest components of this program. There's also financial advisory and capital preparation. So this is anything from establishing banking relationships with one of our banking partners, identifying financing opportunities that may be out there, preparing financial analysis, creating financial projections, developing a business plan, preparing investor or even lender presentations, such as venture capital presentations, and credit guidance. The goal is to ensure that businesses are ready before they are approaching lenders. Legal and business guidance. This can be document review and organizations. So for clients with existing contracts, technical assistance will help ensure these documents are relevant and properly organized with areas of potential concern to be reviewed by USVI licensed attorneys. Legal resource navigation. These are referrals to legal court sites and basic guidance on contract red flags. Business structure information, that's an overview of entity types, liability, potential tax implications, and ownership options. And then also trademark and patent process guidance. This is a very high level process overview and guidance on where to begin. Legal services are limited to general business related guidance, and referrals for legal support are to licensed attorneys in USVI. So let's talk about Get Bank Ready and what that means. So most often, lenders are going to ask for 7 documents. There could be certainly a loan package that is much greater than just these 7 documents. And we will also be talking about all the pieces and parts of that loan application that are supportive to help answer some of those questions that lenders may have. But most small business loan applications are going to require, first and foremost, business tax returns. This is often 2 to 3 years worth of business tax returns, a profit and loss statement, so that's one of those financial statements, a balance sheet, that's another financial statement, business bank statements, so maybe 6 to 12 months of those statements, personal tax returns, personal financial statement, and financial projections. Now, there could be a lot more within this, and we're going to go deeper into what each of these mean. Without these documents, lenders cannot properly evaluate the business, which is why they ask for all of these. So, what are those key 3 financial statements that every business should understand? So, they're listed here on the screen. So, what financial statements are is that they are reports on the company's health. So, this is the company's financial health. They are known as the balance sheet, the income statement, which is also known as the profit and loss, it's got the same name, as well as the cash flow statement or a statement of cash flows. You might see that written one of those ways. Why these are important? They provide a standardized review. You can compare companies easily. They track your performance, and collectively, they help determine if you're loan eligible based on your business's financials. The profit and loss, or that income statement, as I mentioned, this is the #1 most utilized report for businesses because this gives us insight into our income and our expenses. And for most of us, income is the one thing that we're really paying attention to, right? And expenses is another thing that we're noticing happening, right? So our money is coming in and our money is going out. And this is that one report that's going to show us all of that information. It is our income and expenses, as I mentioned, over a period of time. So once we've got our financial information organized, we actually can start to dig in and look at our profit and loss. Maybe today we want to know what money did we make today? What was our expenses today, right? We can look at it for a month, we can look at it for a year, we can look at it from January 1 to today, so we can see year to date. And then we can start to look at it year after year or maybe month after month. One of the fun things in business is to say, where were we last year at this exact same time, right? And so looking at that profit and loss is going to be able to give us that information. So this includes only our revenue, which is also known as our sales or our income, right? And our expenses. And when we take those 2 numbers and we subtract them from each other, we learn what our profit is, so our net income. This is also could be called a loss. And that's where the phrase the bottom line comes from. So the very bottom line of this profit and loss is going to tell us if we were profitable or if we have a loss. This is going to tell us if the business is profitable, or what our profit margin may be. Those are all different phrases used for that bottom line. This lets us know if we're making money. It also lets us know what all of our expenses are and if we need to get control of a certain area of the business. Maybe our expenses look a little bit different than we thought we did, just by looking at it in our bank account. It also helps us understand what our most successful products are, as well as if something is a good investment. So it's a pretty powerful report. However, this report alone does not tell us everything about our business. So, although we're going to get a lot of information off of there and we're going to know if we're profitable, we really need to start looking at those other two reports that I mentioned as well. And so, we're going to talk about those. So the next report, or the second most utilized report, is called the balance sheet. And it truly is an equation. You can see that in the middle of the screen. It's assets equal liability plus equity. And so this equation always has to be in balance, which is why this is called the balance sheet. And this is what our company owns and what we owe. So assets are things that we own and they have a value. So this is our checking accounts, our savings accounts. This could be money that we've invoiced that we just haven't collected yet. That's called accounts receivable. That's an asset. This is also things that we can touch and feel, right? So it's equipment that we might own, and it's land and it's property or a building, right? Those are all assets. Those are all going to be on the balance sheet, and those are not things that we're going to see on that first report that we talked about. The other thing that's really important on this is our liabilities. And so these are things that we owe, and they also have a value, just like assets. And so these are our debts. Maybe these are bills that we haven't paid yet. These are, that's the word accounts payable that you'll see there in the middle of the screen. These are also taxes that we might not have paid. It's also any credit cards that we have, as well as any loans. So we're going to be able to see any loan balances that we have on the balance sheet. And then we have equity, and equity is what is known as the value of the company to the business owner. And so often in small business, this is actually how a small business owner pays themselves. So we typically aren't an expense, and this is really based on the structure of your company, whether or not you're going to pay yourself through equity or if you're going to be required to pay yourself with a W-2. But the equity is that value to us, right? This is where we're going to see a word called retained earnings, which truly is the profitability of the company over time. So this number, if we're profitable, this number is going to continue to grow. If we have a loss every year, this number is going to stay negative or go down. So these numbers collectively, looking at our assets, our liabilities, and our equity, actually provide a lot of information to our lenders when they're looking at them. So the accuracy of this report is extremely important. All of the report's accuracy is extremely important, but definitely with your balance sheet. So many small business owners that we talk to, they might have their profit and loss together and organized and understand it. However, the balance sheet, though, they may say, "Oh, that's never been correct," right? Or I don't even know where that is. However, we want to make sure that we know that our asset accounts are correct, right? So what our bank balance is pretty important. If we have any of those assets, such as equipment or buildings or things of that nature, those are extremely important because they have a certain value. And so a lender is going to be looking at the assets that the company has because overall that is valuation to the company. Also, having those loan values correct is really important as well. So you don't want to say you owe more money than you truly do to somebody, right? So those credit card balances need to be accurate month to month, as well as any loans that you may have or lines of credit, because we don't want to say that we owe more money than we truly do, right? Same thing with any of those withholding accounts, from a taxes standpoint. We want to make sure those are accurate. And then equity, business, the banks are definitely going to be looking at equity because they want to know what that overall investment looks like into the business from the owner standpoint. So being able to have that equity healthy is important. And there are a ton of ratios, and we could spend an entire workshop just talking about balance sheet ratios and what all of those mean. But the lenders are going to take all these numbers that they get from those assets, liabilities, and equity. And they're going to run all of these figures and formulas through, and they're going to help determine those ratios. What the overall health of the business is from a financial standpoint. And so that's why the balance sheet is extremely important. Yes, the balance sheet doesn't capture everything again, right? It's only a component of that. But truly, overall, it helps determine your financial health. It helps you obtain loans. It values the company, and you can monitor those changes over time. So, as opposed to the profit and loss, where I said we can run a profit and loss and look at today, we can look at last week, we can look at last month, last year. The balance sheet is as of a certain period in time. So, if I run the balance sheet today, all of those loan balances should be accurate as of today, right? If I run it for the end of last year, if we're talking about last year specifically, then on the last date of last year, all of those balances on the balance sheet should match what those balances were as of that day. And then the third report, which sadly often gets called the third most popular report, in my opinion, it probably should be the number one report. This one gets forgotten. Is the cash flow statement. And the cash flow statement is how we as a business owner can know whether or not we have the money to spend. So, too often we'll look at our profit and loss and we'll look at that profitability at the bottom and we'll say, okay, we're profitable. And then we'll go over to our bank balance, right? And we'll look at it and we'll say, oh, we've got money in the bank. This is perfect. I can go buy that piece of equipment, or I can do this or do that. However, the cash flow statement is, instead of looking backwards, which is what a profit and loss and a balance sheet is, a cash flow statement actually helps us look forward. And so it's tying together those two statements that we've already talked about with profit and loss and balance sheet. And we're looking at what the difference in operating activities might be. So where's the money coming in and where's the money going out from the normal expenses? Are we waiting on money and someone hasn't paid us yet, right? When do we expect them to pay us? That's going to let us know if we're going to be able to accurately cash flow our business. Same thing with investing activities, financing activities, right? So the profit and loss doesn't tell us loan payments. There's nothing on the profit and loss that's showing that we're paying down a loan. However, the cash flow statement is going to show us that there is a loan payment coming up, often on a very consistent day every single month, right? Same thing as a credit card, although that credit card payment might vary depending on how much money we spent the month before. But this cash flow statement, if we keep this updated and we utilize it in our business, we're going to be able to accurately spend our money, and make those better decisions about whether or not we have the actual revenue coming in to cover those expenses going out. And so this helps us tell that story, that difference between why are we profitable, but we have no money? And it often has to do with that flow of cash. It also helps us prevent that panic that may happen when suddenly we have a bill that's due or a loan payment that's due, and we don't have the cash on hand in order to be able to do it. So, very important item, even though it's the third most popular, in my opinion, it probably should be number one. So, what happens then when we apply for a loan? So, we've talked about the important documents that they're going to ask for. We talked about those three financial statements that are extremely important to have accurate. But what happens? So we go, we submit our loan application, right? And so we get all these documents together, and we submit them as well. So it's not just filling out a form, right? There's a lot of things that we're going to be asked for that we have to add. The loan officer is going to review our business in three different stages. So the first thing they're going to do is just a documentation review. Do we have all of these items that we've asked for, right? So that's step one. everything in the folder. Are all the required documents there? The second step then is going to be that actual financial analysis. So when I talked about all of those ratios that they're going to run, as well as they're going to ask a lot of questions throughout those documents. Do these financial statements, does this information support the request, right? So we're asking for a certain amount of money, typically when we're asking for a loan. And so they're evaluating all of these documents to make sure that that supports the request. And then my numbers got off there. That should be number 3 instead of number 1 down there. Is the overall risk evaluation. So does the loan make sense? And can it be repaid? 2 very important questions. So, often when we're asking for a loan, we are trying to look backwards at all that pieces of information and we're making sure, okay, we are a legitimate business. Our financial statements say that we can support this. We have a good reason. Then there's that other part. Can we repay that? So is the actual loan that we're asking for something that we're going to be able to support in the future? So that's the risk evaluation there. If this documentation is incomplete, then the application often stops at the very first step. And so we talked to quite a few business owners right at step 1, right? And often the first time that they know that maybe their balance sheet isn't structured correctly. So or their profit and loss isn't structured correctly. And what I mean by that is there's a chart of accounts behind all of that that tells everything where it's going to go, what report it's going to land on. And if you've started a software like QuickBooks or you've been bookkeeping yourself, there might be structural incorrect items in there that you weren't even aware of. So often, unfortunately, when we're applying for a loan is we might have received that feedback. And so definitely with the SSBCI program, it's a great resource for you to have to be able to say, can we check my documents ahead of time before I get to that point where I have already applied for a loan, right, and received that feedback? And then I have to go back and correct everything. So you want to approach the lender at the moment when you know things have been reviewed and are at their most correct. So stopping it at step 1, right, get everything corrected then so that financial analysis can take place. So before approving a loan, then, a lender needs to be able to answer typically these 5 questions. Is this a legitimate, properly structured business? That's number 1. Is this business profitable? Number 2. Can this business afford the loan payment? Number 3. And does the owner manage the business responsibly? Number 4. And 5. Will this loan help the business grow? Each of these questions requires very specific documentation, and we're going to talk about that. So, is this a legitimate business? Question number 1. So, before anything else, lenders must confirm that the business legally exists. Is it properly structured? Who owns it? And who has the authority to borrow the money? Documents that help answer this question: a business registration or formation documents, articles of incorporation or organization, operating agreements or bylaws, business licenses or permits, an EIN number, that's the federal tax ID number, confirmation, and then also ownership documentation. So even though they might ask for those 7 standard documents that I talked about at the beginning, this is where we start to get into those additional documents that could be requested in order to be able to determine the answers to these questions. Next, is the business profitable? So lenders need to see financial performance over time. Is revenue consistent? Are expenses controlled? And is the business stable and growing profitably? Now, with that statement, it's assuming the business has already been operating, right? So there is also the path of a business is new, they are a startup, you need startup capital, right? That looks a little bit different. Obviously, you're not going to be able to provide tax returns for prior years and financial statements for prior years. So they're going to lean very heavily on other documents, and we'll talk about those here in a second. But to be able to answer the question about, is this business profitable? This is an existing operating business, right? Those are the profit and loss statements, usually 2 to 3 years, balance sheet, business tax returns, as I talked about before, and a year-to-date financial statement. So we're not only going to look at that profit and loss backwards for 2 to 3 years, but we also, it's March 18th, right? So we're going to look at that year to date from right now until March 18th. Also, throughout that loan process, they may ask for updated year to date financials, right? So depending on however long that takes, you may be submitting them again. If the financials or records are incomplete or inconsistent, then the lenders cannot properly evaluate the business. Then question number 3, can the business afford the loan? So the lender must determine whether the business generates enough cash flow to make those loan payments. So documents that help answer this, again, the profit and loss statement. And then this is where that cash flow statement comes into play, right? So they're able to see what that forward-looking picture looks like to make sure that that loan payment can be repaid. Business bank statements. So those business bank statements and credit card statements, loan statements, whatever statements that they may request are helping legitimize all of those numbers and figures that you have then in your financial statements, right? They're looking for that inflow, outflow of money to ensure that everything is properly accounted for. And then this is the key one here. These are financial projections. So financial projections are that forward-looking, what does this business look like? This is if the business is new and starting, you might have those initial financial projections. This is what our first year looks like, second year, third year, all the way out to 5 years often is pretty common, as well as if I am asking for this loan, right? And this is my plan of what I want to do with this loan. How does that change the trajectory of my business, right? So we're looking at maybe business growth and our profit and loss for the last 3 years. However, now if I have this, $100,000, $500,000 loan, whatever it may be, then those projections are going to look a lot different, right? The business is going to grow. There's a whole nother product line we're adding. Maybe it's a new store, something of that nature, whatever it is that we're asking for that loan for. And so those financial projections just aren't numbers on paper. These are accurate that can then support the plan for the business moving forward and what that loan is all about. So what the lender is evaluating here is how much money the business generates each month, what the existing expenses are, and how a loan payment would then fit into that budget moving forward. And this is why clean, organized financial records are very critical. Next question, is the owner financially responsible? Yes, this does come back to the business owner, right? We can have the greatest business out there, but we also need to evaluate the business owner. So for many small businesses, lenders also review the owner's financial background. The documents that help answer this question are your personal tax returns. Sometimes you will be asked to submit a personal financial statement, as well as your credit history. So credit history tends to be one of the very first items that they're often going to ask for, either a soft credit check, so that it's not hurting your credit right there in the front end. And that's one of those qualifying factors. SSBCI does have a technical assistance part that helps with credit guidance. So if you have issues in your credit or you've been denied in the past, certainly that is one of those items that we can assist you with. And the good thing is over the 3-year period, credit is not something that you can fix overnight, unfortunately. But there are steps that you can take to improve that. And as we are here in that time, you might be able to improve that credit and then resubmit that loan application. So small businesses often depend heavily on the owner's financial stability. responsibility. For most of us, as a business owner, we are so ingrained in our small business, and we are the ones that are funding it, right? Unless we've got capital that is happening outside. So lenders want to confirm that the owner has a track record of managing finances responsibly, as well as the ability to support the business if needed, right? So if the business gets in trouble and it's not able to then reach its financial obligations, is the owner able to step in and help at that point? And this is standard lending practice, so it's not a negative signal. It is just standard practice across the board. And does the loan make sense? So, lenders want to know exactly how the loan will be used and how it will benefit the business. Documents that help answer this question, there might be a loan request summary where you might actually be saying, this is exactly what I plan to do with this. A business plan is a great way to tell the story of that, especially if you are a new business starting out, or maybe you're changing the business from what it is in existence, or a business overview, financial projections, as well as those cost estimates or equipment notes, right? So if you're buying a piece of equipment, that's a pretty simple thing to say, this is the piece of equipment, this is why I need it. You may be able to then say, this is what I'm going to save in labor expenses or other costs that might be out there because I'm buying that piece of equipment, or I'm automating, or I'm changing this part of my business, right? So ultimately, that's going to help improve the business, and you can tell that story. So lenders want to see a clear explanation of how much funding is going to be needed, what the funds will be used for, and how this investment will then help you generate income. So what get bank ready or bank ready actually means? So a business is considered bank ready when it can provide organized financial statements, business and personal tax returns, documentation of the business registration, a clear explanation of how those funds will be used, and realistic financial projections. When these pieces are prepared in advance, the lending process becomes much smoother. It's a term that we often call underwriter ready. That means the loan officer is able to look at all those documents pretty quick. They're able to do that financial analysis. They're able to look at that risk, and they're able to then say, okay, we're moving to the underwriter. The underwriter is able to then give a thumbs up, and it's a pretty smooth process. Common reasons loan applications get denied, though. So, the financial records are incomplete or they're disorganized. Revenue can't easily be verified. Personal and business finances are mixed. This is a really big one, and we have a problem with this as small business owners, especially when we're starting out. When we talked to you about getting your business organized and helping you lay out what those financial statements look like, or that structure for your financial record keeping, we will talk a lot about keeping personal and business finances separate. We definitely don't want any personal transactions showing up anywhere in our business finances. And that one's a tough one because, as I mentioned before, our business is so ingrained in our lives, and we're already infusing all of our personal money. But there are definitely steps that you should be utilizing in order to correctly document money that's coming in from you, as well as money that is leaving the business and going back to you. So not paying personal expenses with our business money, and vice versa. We need to properly account for all of that. So we've got the appropriate paper trail, as well as you are able to defend it when you are in one of these situations. Credit history, as I mentioned before, is another one. No financial projections are available. So we need money, but we're not able to tell that story or show what is going to change or happen with our business because of it. And the purpose of the loan might be unclear. So you can certainly see when I was talking about in that cash flow world, if cash flow gets tight and we panic and we go to a lender because we need money because we can't pay bills, right? That's the worst situation that we want to be in as a business. And so often we have a very unclear loan need, other than we're just trying to get by, right? And we want to make sure that we're able to provide that clear picture of what this loan is all about. So most of these issues, although can be resolved before we're applying for a loan or for financing. And then this is actually my last slide. So where the technical assistance can then help you. So this is exactly where SSBCI Technical Assistance Program provides that support to small businesses throughout USVI. So if you are a business that is based in USVI, you are eligible for SSBCI technical assistance. So businesses may receive organizing financial reports or records, as we mentioned, preparing financial statements, developing financial projections, building business plans, introductions to those key lenders that we have on the call here today. And the goal is to help you and your business approach these lenders fully prepared and truly bank ready. The QR code that you see on the screen is going to take you to the SSBCI registration portal. The website for that is actually USVISSBCI.com. That's our SBC consulting page. You'll fill out just a few pieces of information. Once you are in our system, the next step then is that someone from our team will reach out to you via email. That's the first step, and it will include a link to schedule your first meeting with us. And in that meeting, we will, with you virtually over Zoom, very much like this, we will step through your business from top to bottom and we will do what is called a needs assessment. So there are going to be a lot of questions and answers that are going back and forth. If you're not able to answer all of them right then, that's okay. That's part of the process, right? And that helps us understand when you might or where you might need that extra help in order to get ready. We're also going to ask a lot of questions from a compliance standpoint because this is a federal program. So there are some documents that you will need to sign as well as some questions that we'll ask for that as well. And that's just because it's part of the program. But we are very sensitive to those questions that we ask. And I just want to make sure that everyone's aware that there will be a lot of things definitely in that first meeting that we will talk about from a business standpoint. Once we have done that needs assessment, then that is how we evaluate the next steps. Are you a company that's seeking capital? Are you almost bank ready, right? What exactly do we need to help you with? At a minimum, we will help connect you to additional resources to help you get from where you are to where it is that you're trying to go. And then there will be some kind of action plan that we will also provide you. So that is a step-by-step. This is what we heard. This is what you need. This is the next steps to take to help you get to that next step. And obviously, we are here for the next 3 years. So we want to see your business grow and stay connected. And we are super excited for the help that we are able to provide to all of you and your businesses. So any additional questions, Karen, that we need to discuss?
No, I'm going through and answering as we go. I did put the website URL in this chat as well. So if you wanted, the QR code isn't working or you don't have a phone available, you can click this URL here, which is USVI SSBCI.com, and that will get you to the application as well. I think I've answered most of the questions. If any other questions come through, I'll answer as we go.
Yep. So we have about 10 minutes left in our hour here. So definitely, if you have any remaining questions, please go ahead and drop them in the chat. I can see them now since I'm not talking, and I will help jump in and answer them as well. And then Charmaine or the EDA team, if you guys have any follow-up as well, this would be a good time if you feel the need.
I would like to say, Christy, very good presentation, very informative. We do have
Thank
some
you.
bankers, the bankers on board, and I see Tiffany. Tiffany, thank you for providing that comment and your telephone, your contact information. Thank you for that. Darren, the lenders are really important. Well, I guess the most important part at the end of the day of this process. And so, again, Merchants Commercial Bank, Banco Popular, they're on the line, on this webinar. And, just thank you. We can provide you as well with the additional contact information for the remaining banks. And so please feel free to reach out to us. As you know, there are 5 local banks on the island serving our USVI community: Merchants Commercial Bank, First Bank, Banco Popular, Oriental Bank, and Bank of St. Croix. These institutions, they are aware of the State Small Business Credit Initiative, the Loan Guarantee Program, and also of the State's SSBCI, the Technical Assistance Program. So, we can provide the contact information for those banks as well. I just wanted to get that out. Thank you.
Sure. So there was a question in the chat: how difficult is it for a new business owner seeking a business loan but does not have cash equity? That would be a specific lender question, so I would defer to them for that answer. But obviously, the other information documents that we talked about are all part of the story, right? So having those assets, having not just cash equity, right? There are many programs out there, and they have different requirements. So certainly that's a lender specific question. Oh, that's a great question, Joy. And again, right, it's a lender question. So if there's any lenders that do want to speak up, if not, that's okay. We can connect Joy offline. But Joy would like to know if there's a business type that they do not lend to. So is there any particular business type that is excluded from lending? And also the lenders can just drop it in the chat if they want to.
Hi, good morning. Darren Vantable, Banco Popular. I'll answer from a bank association perspective. So I'm taking off my Banco Popular hat. Joy, in general terms, banks would review any presentation that you provide. We are all full service banks. So we review each individual application and presentation by its own merit. So if you have an idea, if you have a proposal, I would suggest that you sit with your banker and have a conversation. Each loan may be different, the structure may be different as well. But ultimately, your banker will work with you to make the transaction bankable. And in the event that it's not, they'll be able to give you guidance along with SBC Consulting as to the way forward and how to get to where you need to be able to make a strong presentation to the bank. I hope that answers your question.
Thank you, Darren. Any other questions? We still have a few minutes. Are the dates and loan terms competitive with the larger mainland lending environment? The rates. Again, that's a lending question. EDA may be able to speak to this from the SSBCI loan part.
Both. Well, what I'll say, I can't answer in terms of, the competitiveness, but what I'll say, most of the loans, most of the lending, the commercial loans are tied to Wall Street Journal Prime, and then there's a spread. The competitiveness will come in that area of the spread. So, you just have to speak with your banker, with your lender, and they will provide you with the best possible rate based on your overall presentation and the level of risk involved.
Additional questions? Looks like maybe no. So as long as there are no further questions on how technical assistance works or how to apply, obviously for that technical assistance part, the QR code there, as well as you can visit the website directly, that USVI SSBCI. Everybody that is on the call today, we will connect with you post meeting just to thank you for joining. Everyone put their email when they registered. So certainly, even if you are not at the point today that your business is ready for technical assistance, as I mentioned before, this is a 3-year program. This will be live the same website, so just store that information. You might start a business next year, and need that help. So you might not be to the point for capital, right? But at some point in the next few years, you certainly might be. So we look forward to speaking with you if it's not now, but in the future. So keep that in mind, and you will definitely see information out there, especially on Facebook, as well as maybe in the newspapers of upcoming webinars. If as long as you were registered, we will send you the next workshop, which will be in June. I don't think we have the specific date yet, Karen. Maybe we do, but it will be specifically on credit guidance. So if you are one of those that falls within potential credit history issues, that topic will be specifically credit guidance. Go ahead, Karen.
Yeah, we had 2 other questions. One of them is, what is a good product to use for a P&L statement? So you could quickly hit that one here in the next minute or 2.
Yep. So we are big QuickBooks trainers, but I understand that QuickBooks does have a fee associated with it, right? But if you are growing your business and headed in that direction where you want more automation, simple maintenance of your finances, QuickBooks is definitely a way to go that we recommend. Wave is another software that can be a little less expensive than QuickBooks. It has a little less flexibility. But ultimately, you can start with something as simple as a Google Sheet. There are templates out there that we can help you utilize to get your information organized. It will generate a simple profit and loss, as well as you can plug the numbers in for a simple balance sheet. We have helped many businesses who have gone into the loan application phase with utilizing those templates from Google. Really, it's the accuracy of the information, right? Google is more manual. You have to type in every single transaction in order to generate that, as opposed to using something like QuickBooks. But I am definitely a fan of automations, me personally, especially when you're trying to grow your business. And it will scale with you, where Google, you will only be able to use that for so long, or Excel, right? So Excel has very similar templates to Google.
And then the last question, I think somebody might have sent you something directly, Christy. So you have to see if you have a
Oh,
question that's specifically to you. Otherwise, I think that's cleared all of them out.
yep.
Good. I will
Oh,
ask our CEO or a CEO to, give their closing remarks, if any.
Yeah, I'm gonna take the opportunity and defer to Dwayne. You heard from me earlier today. So Christy and team and Karen, thank you so much for the presentation. Great presentation, very helpful, and hopefully the audience has realized what needs to be done in reference to approaching a banker or approaching a lender in reference to the type of statements and the business plan that's needed. So Dwayne, I'm going to turn it over to you if you'd like to give some closing remarks.
Well, thank you so much, Mr. Biggs, but I want to thank several folks on this call, SBC Consultant, definitely for the high-level information provided this morning. Thank our partners, all of the lending institutions in the Virgin Islands, and to all of the participants and possible businesses that have joined this webinar. I encourage all of you to take this information, reach out to Ms. Brooks and our team at VI EDA regarding any other support that we can provide to you. This is a series of webinars that will be conducted. It is here for you. We are here to serve. Please utilize the resources that we have available that would strengthen and grow your business. Again, look forward for the next webinar. Information will be forthcoming to all of you via email and the date and time, but continue to utilize all of the services we have locally to assist you in your particular endeavors. Again, thank you everyone for joining us this morning. Have a wonderful, wonderful day, and we look forward to the next event where you will be present. Have a wonderful day.
Thank you, everyone.
Thank you all.
Thank you,
Enjoy your
everyone.
day.
Thank you.